Hi guys, so in today's session I will be explaining the trade ATS trading strategy, how I use it to day trade on the 5-minute chart without having to look on other time frames, and I will be showing you how you use this strategy to get 1-to-8 risk to reward ratio trades that have a very high win rate. I mean, they are above 60%. Now, the first thing that we have to know about the strategy is the trading time. So I am trading between 8 a.m. and 18 p.m. GMT plus 2 time zone. Okay, so this is 8 a.m. to 18 p.m. GMT plus 2 time zone. So the first thing I will be looking for is the areas of interest. Now, the areas of interest for us to trade, to look for trades, are three kinds. The first kind is the liquidity lines. They should have generated the liquidity lines from previous, like before the 8 a.m. So whenever these are generated from before the 8 a.m., then we consider them to be valid. Now, the other thing that can be considered an area of interest is the white expansion lines. So these white expansion lines are also considered important if they have been started from an before the 8 a.m., from before the session started. So as you can see, and the third one is the midpoint of these gray boxes, if the gray boxes have been also formed before the session started. So we have three areas of interest. Now, the trigger for the entry is whenever the prices test these areas of interest and then form a reversal. Like we have a blue color on the candle, and then the reversal is when we have a yellow color. So this is considered a trigger for entry. Now the entry is as follows. When we have this change in color, we will put the entry according to the previous or the last blue candle. So this was the last blue candle. We will take the low of the candle as our entry and the top of the candle as our stop loss. So in this case, as you can see, this trade had an entry here and a stop loss here. Now, there are some times where if this happens, we will not take the trade, and it will be for a valid reason. Now I give you some examples here. Now, as you can see here, we had here, like, this is the first touch of the liquidity line, which happened before the line was formed, like before the session was started. However, as you can see, when the yellow candle was closed, it didn't close below the white expansion line, which also formed from before. It closed above it. So this invalidates our entry. So we will not consider this to be a valid entry. We will wait until the price will form a higher high and then go and form another possible entry to consider if we will take it or not. So this was the second one. But because also it did not have, I mean, it just barely touched the white line, and it could not close below it. So this also invalidates this entry. So this is not a valid entry. Now, we will wait until price will go above this level and make a turn again. So when this happens, it happened here. As you can see, we had a move up. It made this higher high, and then we had the move that we are expecting. Now, just a little bit of explanation of the meaning of these red boxes. These are called contraction boxes. These mean that the market is forming some kind of a consolidation area, and the market, after a contraction, it should form an expansion, and after the expansion we should get the trend. Now the expansion can be simple, it can be complicated, but what we need to know is that once we pick up liquidity from a previous session and we have contractions, then we are looking for a trend to start. So this happened here. This gave us the direction bias that we are looking for a sell. This was the first contraction with invalidated entries, so we will not consider these. And it's always best to wait if we have a contraction and an expansion starting, which gets invalidated. It's always better to look for a level above the previous high. For example, if we want to sell above the previous high that formed. So these are not valid, not valid. Now this here was the first high above this area, and as you can see it went up. Now this was the first signal after this high was formed, and then we have the yellow candle. Now we will put our sell at the bottom of the candle and our stop loss at the top of the candle, and our target will be 8 times this area. So this is our risk area, and this is our target. As you can see here, this is our risk area, about 9 or 8 pips, 10 pips, and this was our target, about 76 pips. So this is 1 to 8 risk to reward trade. Now as the market was going down, it reached areas like here. As you can see, this is a white expansion line from a previous session, which is truncated. Now once we get this kind of like the market reaches this kind of areas, we can move our stop loss to break even. So once the market reaches here, we can move our stop loss to break even. And also when it happened here, it reached a liquidity area from a previous session, like also we can move our stop loss to break even until it achieved our target. So as you can see here, it achieved the target. Now this is in simple terms how this strategy works. Okay, now I have tested this strategy on several pairs, and I have found that it has actually some interesting results. So let's see what we can expect with this strategy. Like, I have tested it on these pairs for last week with a risk per trade 1%, like here, and the reward 8%. And I have found that we have been able to do 45 trades on these pairs. 1, 2, 3, 4, 5, 6, 7, 8 pairs. And we were able to have a win rate of 64%, which gave us a very high return on investment. Now this, of course, assumes that we are compounding the profits. So we are like using the profits made on the first trade, and we will be risking 1% of the capital plus the profit. If you are using a prop account, it's better not to do it like this, because it can become dangerous for the limits. So this is if you are trading a small account. Now, of course, as a theoretical calculation, I started this with a $1,000, and I was risking 3% for every trade. So here it is 1 to 8 risk to reward ratio, but I was doing it like, because it's $1,000, I was risking like 3%, which is $30 on every trade. Now, based on all the trades that happened on these currencies, I mean, it managed to take the 1,000 to 3,700,000, but this is like based if you have applied everything perfect, you know, and even if you can achieve a fraction of this number, it's still fine. But the idea is to show that this strategy actually has a very good potential. And the nice things about this strategy is that you don't need to look at a lot of different time frames and charts. You just need to consider only the 5-minute time frame. So you don't have to worry about all the different time frames. So as you can see, let's see some other trades. Like in this case here, we had the liquidity from previous session. This was the first. Now, as you can see here, the market went down and this was triggered here. Okay, then it went up, and then you can consider that it hit the stop loss if you want. It's -1, so it's fine. Now the market, when it does these patterns, it can give you a lot of signals if it wants to turn or not. So if somebody, for example, was watching during the day, after he took the trades and put the target and stop loss, well, he can find signals for exits. Okay, like here testing the middle of this gray box and then going up. So these are like signs that the trend is not likely going to continue. So as you can see here, for example, now this is interesting here. I use these resistance and support zones. They are drawn on the 5-minute chart, but they are calculated based on the 1 hour. So as you can see here, the Euro US dollar, it was inside when the session started, it was inside the resistance zone. So it would be more logical to look for sell entries when you are in a resistance zone. But how do we do it? Now, as you can see here, the market was hesitant. However, the market was able to break a liquidity line from a previous session, which was, this was the first one. Okay. I mean, break and close below it. So if the market will just touch it, we will not consider this as a valid break. But this was the first one that had the market test a liquidity line from a previous zone, coming from a resistance area, and then closing below the liquidity line. So we will be able, in this kind of situation, to sell the market and consider that the top of the candle is our stop loss. So as you can see, a very tight stop loss, like 107.21 to 107.27, so like 6-7 pips stop loss. And then there was a very good target, so it went down and hit the target. This is only the case when we are bouncing from a resistance zone or from a support zone. So this is important to note as well. So as you can see here, this was in this day here, we did not have any valid trades. Now, of course, if we will have, like, this is the first time it closed below the liquidity line from a previous session, but it was such a big candle, I would not be interested to trade such a big candle. I mean, this is obviously that it's going to be news and a lot of volatility, so it's better to avoid such cases. But even if you take it, you would have been able to be in some profit, and then it's up to you if you want to get out or not. But this is not a good trade for 1-to-8 risk to reward ratio. Now, another situation here. Okay, as you can see here, on this day, we didn't have any trades in the morning, but in the US session, it went down and it collected the liquidity from a previous session, as you can see here. And this was our entry. So this was the first blue candle after the first yellow candle. And then we were able to get into the trade and it achieved the target. So it's a 1-to-8 risk to reward ratio. So as you can see, this is a very robust, very good strategy, very high win rate. Sometimes the stop loss will hit, but it will be like very small, and the target when it hits, which is regular, actually, if you do it correctly, you will be able to find real profits, and you can grow your account with it. If you need to understand and to learn this strategy further, feel free to check the links in the description below, where I will be giving my contacts and more information how you will be able to learn this strategy. Okay, so hope you learned well in this short video, and if you have any questions or comments, please feel free to ask them below. Thank you very much.